Hello business students, and welcome back to our subscription box project. We're going to move on now to our next part, which is how do you create a financial model for your business? Every business needs a financial model. That is a prediction of the revenue that you're bringing in, the expenses that you're expending, and ultimately the profit that your company is going to earn. Now, this is a really important formula in business. Revenue minus expenses equals profit. Let's go see what that looks like with our subscription box business. Let's focus on revenue right now. That's the amount of money your company is bringing in as a result of sales. With a subscription box, let's imagine that you have 200 monthly subscribers. So these are 200 people that have signed up for your service and they're paying monthly. Well, how much are they going to pay? Let's imagine that you said, hey, my subscription box costs $20 a month for my subscribers. So check that out. We have 200 people paying $20 a month. That is $4,000 total monthly revenue. So every month your company is bringing in $4,000 off of these 200 subscribers. Now, if you times that by 12, so 4,000 times 12, that gets you almost $50,000 in total yearly revenue. Total yearly revenue. That's the amount of money your company is bringing in yearly. That's exciting. All right, so that is revenue, but that revenue is not profit. We have something in the middle here called expenses. Let's go check that out. Expenses are what it costs your company to achieve these sales or to get these sales. And we break expenses up into two types. We break them into variable expenses and fixed expenses. Let's dig into variable expenses. Variable expenses are expenses that happen every time you make a sale. Well, let's look at what our variable expenses are with a subscription box. Well, number one, we have these product costs. So imagine this subscription right here. It has 4 items in it. Actually 5 if you consider the paper cut up in here. And let's say we add all these products together, so this plus this plus this plus this plus the paper. And let's say that adds to $7.89 that we are paying as a company to get these 5 items. We're going to put that under variable expenses because every time we sell a box, we have expenses of $7.89. Well, hey, what about this box? This box isn't for free. We don't get this free. We have to pay $1.26 for it. So and every time we sell a box, that's going to be an expense. So we call it a variable expense. And then, hey, what about shipping? We actually got to ship this box out to customers in Florida, Georgia, South Carolina, Texas, maybe Canada, internationally, who knows? Every time we ship a box, let's imagine that our shipping costs are $6.45. So for one box, if I add these together, $7.89, $1.26, $6.45, if I add those together, that sums to $15.60 of variable expenses per box. So it adds up really quickly. That's variable expenses. So that is every time we ship a box, those are the expenses associated with that. Now to get the total variable expense, we're just going to take that number and times it by the number of boxes we're selling a month. What about fixed expenses? Fixed expenses are expenses that aren't affected by the number of sales that we have. For instance, we're going to need to set up a website where people can come, read about our product, and subscribe and enter their credit card information. That could cost us, let's say, $60 a month to operate that website. Now, that's $60 a month. If we sell one box, it's going to be $60 a month. Or if we sell 200 boxes, it's still going to be that same $60 a month. So we call these types of expenses fixed expenses. They don't change based on the number of sales that we have. Now, once we have our variable expenses and our fixed expenses calculated, all we have to do is add them together to get our total monthly expenses. Oh, that's so great. So now we know what revenue is, we know how to calculate it, we know what expenses are, we know how to calculate them. So let's go out to our tool here and see what this looks like. Now, when you come out here, you're going to enter the total number of monthly sales you expect to make. So if you expect to make 200 boxes a month, selling 200 boxes a month, you're going to put that number there. Here you're going to put, hey, how much are you going to charge for your subscription box? Let's say you chose $19.99. Well, hey, if you sell, this is revenue. Notice that this is your revenue section. If you sell 200 boxes a month at $19.99, your total monthly revenue is going to be $3,998. That's really exciting. Okay, but we have expenses to deal with. Check this out. Here are our variable expenses. And here are our other expenses, sometimes our fixed expenses. For our variable expenses, what I want you to do, I want you to come in here and I want you to add all of the items that you think you're going to put into the first month's box. So you're going to put the name of it here. Mine is going to be a fruit nut bar, a vegan sweetie, a sandwich goodie, and a pop vegan. I'm going to put the cost that I'm going to pay to get this. So each of these bars that I'm going to get is going to cost the business $2. Each of these vegan sweeties is going to cost the business $1. And each of these sandwich goodies is going to cost the business 50 cents. And the pop vegans is going to be $1. Now, if you have other items that you're going to put into like month 2, month 3, month 4, you can put them down here. But we really want to focus on month 1. Now, look at this. It says total cost. Well, total cost is $2 times the 200 boxes I'm going to sell a month. So for my nut bars, I'm going to be spending as a company $400 to purchase all those. Now, something that's going to be really interesting for you is this. Look at over here. This tells you, hey, for your first month's box, you're planning to sell it for $19.99 per box. You have a total cost of items at $4.50. So if you add all this up, it adds up to $4.50. So that is a gross margin. So it's not profit yet, but it's close to profit of $15.49 per box. You can imagine if I came in here and I found an item that was really good, but it was $16 per item. All of a sudden, now I'm negative in my gross margin. That means I'm spending more than I'm charging my customer. Uh-oh, that's not good for the business because you're going to end up with negative profit. You're going to be losing money if that's the case. Okay, well, then down here is our other expenses. So check this out. We have the box. That's going to actually be a variable expense because I need to have a box every time I make a sale. That's a variable expense, so I'm going to check variable expense. Shipping. I'm going to need to ship the items to my customers each box. So that's also going to be a variable expense. And I'll put how much that's going to cost. So my box, let's say I find out that it's $1.26 per box. And shipping, let's say, is $8 a box. And then my website is a monthly cost. Notice it's not variable. It's a monthly cost. And it's about $60 a month for my website. So total fixed expenses or total other expenses is going to be almost $2,000. Now remember our equation. We take our variable expenses plus our fixed expenses, and that's how we get our total monthly expenses. So here we got $2,800 in our monthly expenses, and we're making almost $4,000 in revenue. Remember our equation. Revenue minus expenses equals profit. So you can see that on a monthly basis, even though we're making $4,000 in revenue, we're only profiting $1,100 because the rest of it's going towards expenses. Now, if we extrapolate that out over a year, so I just took this number times 12, that's going to give you your annual profit before taxes. Taxes cost about 10%, so here we have to subtract taxes. And here we have our annual profit after taxes. Long story short, guys, if we sell 200 boxes at $19.99, given all of these expenses, we should make almost $13,000 in profit. You can imagine if we scale this up. Wonder if we said, hey, we're actually going to sell 400. And let's say we find out that we can charge $25. You can see how that flows through, and it affects our monthly profit and our annual profit. Lastly, here are your startup costs. So usually we like to have 3 months of product. And if that's the case, you're going to need about $9,000 to buy 3 months of product. Hey guys, this is the financial model for your business. You're going to come in and you're going to customize it to meet your needs. And then you're going to look at how much profit your company is going to make based off all of these variables. Good luck. I can't wait to see what you come up with.